All right, so gonna do a little bit of a recap of the past three trading days, including Thursday, which is today. Um, I did not trade any of those days. On Tuesday, it was just poor price action. If you look at our news calendar, we had both Powell and Trump speaking. Um, so just looking at the news calendar that day, you could have expected either poor delivery or just pure chop, which did end up happening. Coming into the morning of that day, this is just very choppy. This is where you want to look at either a Judah swing, which is just a manipulation leg um, off New York Open, and then just a reversal off that. If you don't get a reversal, then you look for continuation shorts. But I wanted to say extra patience today. I remember looking at price action this day, and I was like, you know what? I'm probably not gonna take anything, and I'm okay with that. And that's what ended up happening. I just didn't take anything. Right. This is what ended up happening that day. We just displaced the first 15 minutes of price action. Maybe you were looking at this gap, right? Um, you were looking for shorts up here. It would have played out. It just would have taken a long time. Um, but yeah, and you could have had your targets there for whatever you were targeting. Maybe you were targeting like previous day's low or previous day's New York low or something like that, and it would have played out. But it would have taken a long time. If you're okay with holding positions for a long time, that's cool. At times, I'm comfortable with that, depending on the setup. If not, I prefer to be in and out pretty quickly. But, anyways, I didn't take any trades that day. I just wanted to listen to what Powell was saying, and yeah, pretty much after he was done talking or just done giving his speech, and then going into the Q&A, it was a pretty significant sell off. So it looks like I think people were talking about him mentioning how the market was highly valued, so that probably incentivized a bit of fear in the market, and that explains the sell-off we've been having since Tuesday, um, which continued on Wednesday and then Thursday, which is today. But anyways, Tuesday night I actually ended up spraining my ankle. Sprained my ankle hooping with some friends, and it was just hard to get up. And I was like, my thought process was, you know what? Physically, it's a lot of discomfort. I'm not gonna be at 100% because of this, and I'd rather just avoid trading because I'm not gonna be at 100% of my capability. So yeah, I just decided to sit it out, and I feel like it was a solid day. Um, just looking at PA from that day, right? Um, we ended up inverting a 4 hour gap, right? Inverted a 4 hour gap and created a new one. So this happened between um, end of session Tuesday and overnight of Wednesday. So coming into that day, right, this whole area, which we had it marked as a low volume node, so we already have that area marked out anyways. Just from a higher time frame, and we know it's overlapping with 1 hour for rally gaps. So, and we also have hourly for rally gaps here. So London, we have a bit of a recovery, and then end up displacing lower off open. Maybe you could have taken a continuation short, right? Once we form this gap, we get a bit of a retest. So obviously you want to be in near these highs. That's like the ideal setup. But it's hard to get a good trade because if what I found in my trading is that I usually have a good read on medium time frames, being the 5 minute, the 15 minute, um, and obviously those type of trade ideas get validated with structural points in those time frames. So obviously a trade off of this gap would get invalidated up here in this at the start of this gap, or maybe even this structural point. But that's just a very massive range. Just having to cover that's 70 points. You don't want to have a stop that's that wide. So yeah, you can scale in, maybe find a structural point there. Maybe you get in on the retest of that gap and have your stop maybe a little above the wick, maybe at CE of the gap, consequent encroachment of that gap, which is just the midpoint, fancy term for the midpoint of that gap. And yeah, maybe you were targeting pre-sales low, maybe you were targeting this London low or this other London low. Could have worked out, but yeah, coulda, woulda, shoulda. Was not there. Did not take it. So, just doing a quick overview of what happened with PA those past 2 days, and then today, same story. I was, still in pain with my ankle. I am still in pain. I have it wrapped up right now, and it's just hard to get up because you're like, it's the thought of I'm having to get up and deal with pain as soon as I get up. It's just demotivating, um, and it just puts me in a spot where I'm not at 100% of my capabilities. So, yeah, coming into today, there's two things that I noticed right off the bat, right? If you look at a volume profile, right, from the most recent all time highs up until maybe like 15 minutes before open, we are below the value area low of that range, right? Um, if you maybe want to get more granular with it and you just want to look at the session volume profile, right? Before 8 a.m., so it's like, let's say before 8, right? We've broken through the value area low, and as you're updating your volume profile, you're noticing that value area low keeps coming down. Even 15 minutes into open, we notice the value area shifts completely down, right? And there's two things that you can notice here. First, if you got in on pre-market shorts, that's awesome. Maybe you were waiting for a value area low break. Let's say you were looking at it at 8:30, right? You get your value area low break, and then we retest that lower VWAP band. Maybe you got in shorts here at around 8:15, um, right? Maybe you have your stop at this wick, or maybe like above the value area high, right? Maybe something like this, a 30-point stop, and you were just targeting this next support area, which is just FOMC, right? And a low volume node. So you could have taken pre-market shorts. That's one option. Another thing that's a bit more risky. Off open, we head straight through that low volume node into FOMC price action, and here's where you can get more granular with it. Um, you're like, okay, what does price do after the sell-off? We start recovering, try to get above that upper VWAP band, fail, and then get back above it right there. Maybe you were looking at it in the 3 minute. In the 3 minute, it might have been a bit easier for you, right? We get back above it, right? And you can even put in a VWAP like this, right? New York VWAP. So you have both in alignment, right? So we try to break above it, get back below it, and then break above it one more time. Maybe you want to get in here, right? Maybe you stop at session low. That's a pretty wide stop. Or maybe you want to be like wrong pretty quickly. So you have your stop at the candle that breaks that. Maybe you target these highs. Maybe you target like structural points, or maybe you want to align with order flow, right? If you target like New York open high, that's aligned with overnight VWAP. That's a 1 or 2. If you want to ride it all the way up to value that upper VWAP band, it would have worked out as well. One thing that could have helped you maybe hold this long was looking at the initial balance. So from 9:30, right, up until here, so like here to here, right, here to here, right. That's your initial balance. 1 hour initial balance, mind you. You could have also looked at the 15-minute, but it's just a bit harder to pull off. But yeah, that's your initial balance sets here. Maybe you just want to target the point 0.2 right? That's a 1 at 3, point 3, point 4. Or you want to be like, you know what, I'm gonna wait for that 1 hour, right? And you target the point 2. That would have also worked out. It would have gotten you out near the end of the session or near coming into lunch. Um, it would just take a long time, an hour 40, an hour, yeah, an hour 42. So yeah, I think longs were valid if you were looking at it like that. Looking at it like, okay, we were retesting FOMC price action, um, and the IB just gives you the confidence to hold. Once you see that IB high set second, it gives you the confidence to target higher. Um, it's almost a 200 point move, so like it's pretty significant. Maybe you want to go for the actual 200 point move. You would have also cashed on that. But yeah, you would have had a white stop. Like they're saying, volatility is back, which is awesome. Because now we're most likely means we're getting clean delivery towards draws on liquidity. Um, I would say because of the bearish momentum we've been having, if you were looking for longs, got a good entry, got a good stop, and all that, targeting stuff like London highs makes it a bit more difficult. That's like a 300 point move, right? We've already had, if you're looking at Asia highs all the way to London, all the way to New York lows, that's a 370 point move. That's a pretty freaking massive range. So you just kind of have to be aware of market conditions, right? I feel like these longs were valid if you had this zone marked out. And we can look at it from, say, a 1 hour. Um, if we look at a volume profile, maybe from here, right? Up until before, yeah, maybe like up until 7 a.m. or something like that. Um, Maybe we can include some more price action, maybe from like all the way back here, right? You can see low volume node here. Um, but yeah, and then just looking at it from here, I think this is a structural point I was looking at. Yeah, this low, so like this whole bull leg. You can see like my areas marked out, low volume node, low volume node. That's when I realized I did not have this zone marked out. Now I do, because I'm like, okay, what happened here? This is FOMC. This price action right here is FOMC. So that's why I have it marked out as low volume node plus September FOMC, which is this candle right here, that 2 p.m. candle. So really, this whole area is strong. So on the lower end, I have that daily fair value gap, which is also a low volume node, and then on the wick, I just have daily intermediate low, previous week's low, and FOMC low. So it's just a clear draw on liquidity, and yeah, um, it's just really watching price action. So the thing with these areas, right? You can see this is a weekly low volume node and a daily fair value gap. You're like, well, why aren't you paying attention to that? This looks like it did hold, right? So that's pretty good, pretty cool. We could see, a recovery off of this. But the thing with these type of zones, especially if it's higher time frames, is just being very patient with it. Gotta be very patient with wanting to see something clear, wanting to see your confluences in alignment, right? And you want to see like proper framing, right? So in this case, right, if you were trading today, right, you gotta be aware. Okay, what did the overnight do, right? The overnight just dumped, right? Looking at your calendar, we had pre-market news, right? Which didn't do much. It just added to that bearish momentum. But unemployment claims came in less than forecast, which is good for the currency, which means bearish for our indices, right? or equities, right? So gotta be aware of that. Gotta be aware of the context, and just gotta be aware that it's a bit harder to trade these type of conditions. Um, Coming off of all-time highs into massive bearish momentum, so any longs, it's like you're trying to catch a falling knife. Um, so it's like you want to see something clear. That's why I was giving this example where you're okay. You know what? We're coming into this support zone, which is a low volume node, September FOMC. Are we bouncing out of there? Yes or no? We come into it. Doesn't look like we're bouncing. Finally get a bounce. We try to recover. We get above New York VWAP and the lower band of the overnight VWAP. Get back below it and then get right back above it. So like this could have been your entry. That's why I was giving that example. Because you're putting things in alignment, right? Your lower time frames are telling you, yeah, we could bounce here. And you can just be very cautious in terms of like what you're targeting. You could have targeted that overnight VWAP. Maybe you just want to rebalance that. Maybe you want to look at your medium time frames. Do we have something to rebalance to, right? This candle closed at 10. So if you took your entry at 10, yeah, you'd have taken it right at 10. You would have had to go break even maybe at this point because it's a 15-minute gap, and then maybe you could have trailed once we get above that VWAP. So maybe you were targeting that upper band, right? Maybe you ended up targeting the 0.2. You could have been trailing, right? At first, you just go break even, maybe like have your stop there. Maybe you have your stop, let's say here, okay? Maybe you trail to this wick, maybe you trail to this gap, right? You trail to structural points. Your trailing has to make sense. You can't just trail to, oh, I gotta go break even. What's your break even point? Is it just your entry, or was there a significant structural point, right? Then once we break above this VWAP, I'm like, okay, let's see if we retest it, right? We do, okay, cool. We retest it. I can trail to this. Once we'll see displacement above it, and then you see we break it, retest it. Maybe you trail in the 5 minute to here. Once we get that next candle, we trail to there, and then once we see that next candle, we trail to there, and then we probably get stopped out here, which is still solid RR, still a 2-to-1. But if you want to be more patient, maybe you're like, okay, I'm gonna keep it here just to see if there's a retrace. You want to wait for a 5-minute retrace. You're like, okay, let me keep it below VWAP, give it some room to breathe. Once we set the IB high and we break it, you're like, okay, let's see if we get a retrace and then displace through, or just get straight displacement through it. So we do get a retrace. We retest it once, twice, and then I feel like this trailing here is valid. You would not have gotten stopped out. The only thing with me is we did not break this high yet, so it's not quite valid, at least not yet, right? Once we see this massive candle, you're like, okay, yeah, I'm gonna trail to here. If you could have trailed to here, you would have been stopped out. Still solid RR. Either way, it's up to you. I feel like this is just a solid example of how you could have played long today. But like I said, I didn't do that. I just decided to sit it out. I'm probably gonna have to trade tomorrow to avoid triggering the inactivity rule, because that's something that the prop firm I'm trading on does have. But yeah, I feel like volatility is back for sure. Just gotta be on our feet. Gotta be aware of our context. Gotta be aware of our context clues. Anything that can help us determine a bias, right? Have your confluences in alignment. Have your time frames in alignment, and you're gonna be fine. So yeah, pretty solid trading week so far, in my opinion. Some people might say today's price action was shit. I feel like most people can agree that Tuesday was shit. I want to say Wednesday was solid. But yeah, I believe that is all I can say. So yeah, that pretty much wraps up the recap, and hopefully I'll catch y'all tomorrow. Peace.